blocked credit section 17(5). Of course, nobody of us, I mean, as a professional, but as a trade and industry, nobody wanted the government to block any type of ITC. So this is basically a provision which is actually not required. Not required in a sense, and to a certain extent not desirable also in the overall GST scheme, where you have to eliminate all the cascading effect of the taxes. But there is a provision in the law, and government intends to restrict some credit. If your Twitter account may get blocked for any reason, and it may get unblocked in some time also, but the manner in which the block credit under GST has been defined, of course, there are a lot of efforts, a lot of interpretational issues and litigations going to come to make that block credit into unblock credit. So for the courts to agree to a view that these things are not going to get covered under the block credit, or the intention of the government is not to restrict these items, it will of course take a lot of efforts and time to get those all the credit. And Yash has drafted beautiful case studies which are covering all the aspects of this particular section 17(5). So with this brief background, I'll request Yash to start the session with his case studies.
Thank you, Vinod sir. Thank you, Hemang sir. At the outset, I would like to thank CTC for giving us this opportunity to share our limited knowledge on this subject with the esteemed members of the association. And I would also like to thank Vinod ji for his support throughout this proceedings. I have come in touch with him since the time I had started writing GST writing book on the very same topic. And I would like to just mention that he is one of the most humble and nicest person I have met in my lifetime. So thank you, Vinod ji, for all your support which you have given me throughout. Without much ado, I'll start with the case studies. And the first case study which we are going to discuss today is prima facie in relation to works contract service. The facts of the case for this particular case study are that there is a authorized car dealer, Panda Limited, who wants to renovate its existing car showroom. Now, for that purposes, he has obtained quotations from various contractors, and one of the contractors has given him a proposal, or maybe a contract of 1 crore 25 rupees, proposal of 1 crore 25 rupees with item-wise breakup of various works which will be undertaken by the contractor. Now, generally, the term which is being referred by the industry is BOQ. BOQ means bill of quantity, whereby whenever a work is being undertaken, before the work starts, the contractor generally gives the item-wise breakup of all the activities, all the goods and services which he is going to be using in rendering those particular service. So he has provided a BOQ with a proposal of 1 crore 25 lakh rupees. Now, the Panda Limited is going to capitalize this entire cost in its books of accounts. That is one of the facts which we are given, and the contractor is of the view that entire activity is a composite supply of works contract service, which is in relation to immovable property, and therefore the applicable HSN should be 9954. Now, the issue which we have to discuss is that we have to discuss ITC implications from Panda's perspective vis-a-vis the various work or activities which is going to be undertaken by the contractor. Now, we have a list of activities or work which is going to be undertaken by the contractor. These are the activities which he is going to do. Before we go into analyzing ITC eligibility vis-a-vis each of these activities or work which is going to be undertaken, I would like to quickly run you all through the provisions of GST which are going to impact this particular case study, so that we can set some perimeter or background which will help us in doing focused discussion for this particular case study. So the first provision which I would like to touch upon is the definition of works contract service, which is defined in section 2 clause 119. Works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration or commission of any immovable property wherein transfer of property in goods, whether as goods or in some other form, is involved in the execution of such contract. Now, the important terms over here are the word renovation, because Panda Limited is also undertaking the renovation activity of its showroom. So works contract includes the renovation activity, and it has to be done on any immovable property. So this showroom is also technically an immovable property, and there should be transfer of goods as well as services while executing this works contract. So this is the definition of works contract service. Now the provisions of block credit which will be impacting this case study are 17.5C and 17.5D. Now, one point which I would like to highlight is that at the start of section 17.5, the opening line of the section 17.5 reads as, notwithstanding anything contained in subsection 1 of section 16 and subsection 1 of section 18, input tax credit shall not be available in respect of the following. Now, 2-3 important points over here. It starts with notwithstanding. Thereby it's a non-obstante clause, which means that even if you satisfy all the conditions of section 16.1, which are if used, ITC will be available only if used in the course or furtherance of business. So even if those conditions are satisfied, even if these activities are used for the purpose of business, but if they fall in section 17.5, they will still not be available, because it starts with the notwithstanding, or it's a non-obstante provision. Also, the important words over here are in respect of the following, namely. So the limited point which I would like to highlight over here is that this particular terms which I have marked in bold, they basically restrict the scope of section 17.5, whereby to say that only the goods or services which are mentioned in this subsection has to be strictly interpreted as block credit. This they cannot be interpreted beyond the scope which is given for this particular subsection. So going to clause C, it reads, works contract service when supplied for construction of an immovable property other than plant and machinery, except where it is an input service for further supply of such works contract service. Clause D, goods or services are both received by a taxable person for construction of an immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. Then we have an explanation which is applicable to both these clauses, and it says the expression construction includes reconstruction, renovation, addition, or alterations or repairs to the extent of capitalization to the said immovable property. And then we also have the term plant and machinery, which is defined in explanation at the end of this particular subsection. Now, to summarize both these clauses, clause C and clause D, in few points, one can summarize that basically there are only 3 conditions which are to be satisfied cumulatively in order to fall under this block credit of clause C and clause D. If you satisfy these 4 conditions cumulatively, then only your activity or work will be classified as a block credit. Now, what are these conditions? The first condition I would like to break into 2 parts. Condition 1A and condition 1B. Condition 1A is that the works contract service, goods or services received shall result in creation of an immovable property. Now, this is very important. Whether it's a works contract service or receipts of goods or services, it should result in creation of immovable property. Or if it is an activity of repair, renovation, addition, or alteration, it should be undertaken on the existing immovable property, and the cost of that activity should be capitalized in the books of accounts. So either of these conditions, 1A or 1B, has to be fulfilled in order to classify as a block credit. Along with it, one more condition which has to be satisfied is the resultant creation of immovable property be on his own account. The activity has to be on the own account of the person who is getting this activity done. And the third condition is that the immovable property should not be plant and machinery as defined in the explanation. So if it's a plant and machinery, then it will fall out of this clause C and D, and one can say that it's not a block credit. So these are the three conditions one has to satisfy cumulatively in order to fall within this restriction of clause C and clause D of section 17(5). With this limited background of the provisions, now we will try to analyze the eligibility of each of this activity which has been done by the contractor, whether ITC will be available on each of the activity to Panda Limited or not. And I would like to open this open for discussion. Participants can give their views.
Participants are requested to raise the hand so that we can allow them to, we can give them the opportunity to present their opinion.
There are various activities. We'll go activity wise on the eligibility for this particular case study.
Okay, done. Okay, sir. So the first activity is demolition and dismantling work. Whether Panda Limited can claim ITC of this work or activity. Yes, anyone would like to give their
So
view?
Yash, Keval here.
Yes, Keval.
So one of the first primary question which we will have to answer is, should we even go activity wise, or should we just say this is one single contract which requires following activities to be done, and there is a consolidated price for this contract which would qualify as a works contract service as a whole, and therefore the eligibility should be determined based on the works contract being a singular contract and do not go BOQ wise. If the entire resultant is a works contract service with an immobile property, then there will be a restriction, as you rightly mentioned, as far as 17(5) is concerned.
Okay. So what are your views on this? Would you?
I would personally feel it will get covered under 17(5).
Okay.
Resulting in an immovable property. Mr. Kishan has something to add. Sir, you can unmute.
Yeah. See, my view would be anything related to civil structure and civil work, we won't be able to claim that will be go under 17(5).
Correct.
But with respect to plant and machinery, like for example, centralized air conditioning and all, if it is on standalone basis, then yes, we can take an input credit that won't go under 17(5) C or D.
Okay, so basically, sir, you are saying that we will have to check the eligibility item wise, work wise, and not.
Yes, that is what. Yeah, Mr. Yes, that is what I also feel. We should go item wise, and because whatever related to the plant and machinery, if it is standalone, unlike the lift or elevator, which is fixed as a that may not be, but the centralized air conditioning and all, yes, we can dismantle and we can remove it. So therefore, item wise will be better instead, composite entire thing as a one. So we can salvage some credit from this 17(5) CD. That is what my limited observations.
Okay, sir. Okay.
Bhavin.
Yes. Good afternoon. Now, according to me, when you say composite supply, I think Yash has mentioned in his case study that these are the section which one has to read it, where a composite supply, mixed supply, but that has to be read with the output supply and not for an input supply. When a person who wants to claim a credit, he has to see whether the goods or service, whether it falls under whether it covers under 17(5) or doesn't fall under 17(5). So in my opinion, if I am a recipient, I don't have to see whether it is a composite supply because it is pertaining to taxability. So one is not required to do whether it's a single composite supply, total contract, whether BOQ is there. When you are having an independent item wise is there. So a item wise one has to first determine whether it results in immobile property. So how you consider the immobile property? So you have to see whether the nature and object of annexation, both has to be considered. And I believe the later part, the object of annexation of a particular chattel is more important than nature. So in here, the itemized which has been given, in my opinion, cubicles, TV and HDMI, that may be considered as a movable property and ITC should be available on that. And other thing, even for centralized air condition, I think the object here appears to be, it is permanent in nature, so that may not be entitled for an ITC.
Okay, so you're also saying that we have to go item wise and not the contract as a whole.
Yes, yes.
Mr. Chandrasekhar wanted to add something.
Yes, sir. Sir, that 17.5, we can categorize into three, sir. I would say it is creation of an immovable property, capital in nature, revenue in nature. That we carve out an exception of plant and machinery. That's like that. So if you look at that in this contract, it has all the three elements. So there are certain items which has to be capitalized. I mean, though it may be an immovable property, there are certain items, though it is an immovable property, but it will be claimed as a revenue expenditure, and there is a creation of a plant and machinery. It is. So I would say that is. Can you go to the next slide, sir? That this item wise is work. Yeah. So I would say that is this, as far as the centralized air conditioning system is concerned, I would say it can be called as a plant and machinery. So full credit will be available. And this cubicle for providing seating to the employees, it is not a, I am assuming that it is not a fixture. It is a furniture, it is. So if it is a furniture not covered by this works contract, and of course it will be covered. And rest and all, of course, say that how it has been dealt with the books of accounts, that only will determine the eligibility or otherwise of ITC. This is my humble view.
Okay. Anyone else would like to add?
Yes, just to my earlier thoughts, is there a need of having a separate contract moment you want to split this, or a singular contract having BOQ?
No, it's a single contract only, Keval Bhai. I think the facts are very clear. It's a single contract. But how this industry operates is that whenever you give a work to your architect or maybe to a contractor, they give you a detailed breakup of the various kinds of work they'll be doing. They break it into different parts. One is the civil work, one is the furniture work, one is your electrical work, plumbing work. And within each of these sections, they further go to define the minute activities which they are going to carry out. And again, each of those activities, they identify the cost, the value of material and labor which they'll be using. So it is a very standard practice which is followed by the industry. It's a single contract only. I would like to say it's neither a composite supply nor a mixed supply. It's a single supply, single contract, whereby there is a BOQ identifying the various works which are to be undertaken.
Noted. So that was where I was coming from. See, when you say it's a single contract, the entire obligation is qua the contract. Then whether you would like to drill down further is the question which I was trying to address. The moment you say it's a singular contract with all obligations on that contract, and that is where I feel further drilling down or breaking down would be a challenge.
But I think the point which Keval wants to make is, yes, come to that slide 17.5. See, what Keval wants to make is that if we read section clause C, it says works contract service, right? So once we take the entire contract as a single works contract, right? Then if it is a works contract, and if it is a works contract of renovation, if you say it's a single contract, the entire service is works contract, entire service. Then whether we should go beyond and split that entire thing, or we take an assumption that even though the contract is a works contract, but the different items within that are not works contract. The point which Keval wants to make is that in this 17.5C, when we see works contract word, we see the entire contract as a works contract. Then technically works contract service for construction, and construction includes renovation. Then he's saying that you don't even if there is something which is movable within that works contract, that should be disallowed. That is what Keval you are trying to convey, right?
Yes, sir. Yes, sir. Absolutely, sir.
Correct, right? So any views on this, that let's say it's a single works contract, and then the moment it's a single works contract, whether you should look item wise or there's any other view?
Sir, just can I come in, sir? I just want to add one more dimension, sir. Yeah. So now, see, we have one set is composite supply, mixed supply is one part, and
Correct.
other one is a works contract on the other side it is. Now, what happens is in this case, then we may have a doubt that whether it can be fixed into that term mixed supply. See, because they have said that if you are not able to identify the principal supply, it will be called as mixed supply. It is.
Correct. Correct. Fine.
Now, but there is a separate carving out an exception to say that if it is in relation to an immovable property, then it will be deemed as a works contract. Now, going by harmonious interpretation, I would say that if at all by going by the essence of the contract, if you say that predominantly if it is meant towards an immovable property, then we can fall into the category works contract, and accordingly we will decide valuation or how we are going to take credit. That will come next. It is.
Correct.
But if you are not, if you say that again, I'm indirectly I'm roping in the principle of this composite supply principle only. Here it is. So if you arch from the entire gamut of the contract to say that no, the entire work is not in relation to an immovable property, then we'll go by this composite supply, mixed supply principle. It is. Then we'll give the works contract principle again. That's how we have to go by.
There's one point I mean in excise and service tax, whenever we used to take SENVAT credit of this thing, and like especially in excise, it used to happen that department used to allege that the person who has supplied the goods, okay, his product is nil, but he has paid excise duty. His product is nil, but he has paid excise duty. So when it comes to you, the person has paid excise duty on a nil product, so we won't give you the credit. We won't give a credit to the recipient. That was the argument which department used to take in excise. At that time, Supreme Court and tribunal judgments are also there that classification of a service cannot be decided at the recipient end. Classification of the service has to be decided at the supplier end or the assessee, the manufacturer end. And you cannot change the classification at the recipient end. So if the manufacturer has classified his product A and paid excise duty, the other person will get the credit, irrespective of that manufacturer's product was A or B or C. There's a principle in that. So whether that principle will also have an impact on this particular clause or this particular issue which Keval has put forth.
Sir, I'll have a small counter to this, sir. Sir, we are not talking about a scenario where the supplier has consciously paid tax on an exempted product. Here it is a case where there is a classification issue. I would say under the excise law, you know that if goods falling under specific tariff rating alone will be available for credit. Not
Correct.
every other goods can be 84, 85 like that. It
Correct,
is there.
correct. Fine.
So assume for a moment that if the supplier has wrongly classified that instead of 84 or 85 or something like that, I think that still we have a case to argue that, saying that see, if you look at in substance that what material which I have received, that the correct classification is so and so, and I will be eligible to take credit. That could be a possible argument. Of course, it has to be agitated at the highest level, not at the lower level. It is.
Then I was just trying to put forth the argument. So yes,
Yeah,
you want to add anything to this before we conclude on this particular main point? Then we go on the items.
No, so basically what I would like to say is that this is a works contract service. There is no denial on that. This is a works contract service. But when we go to clause C of section 17.5, it clearly says that works contract service resulting in creation of an immovable property. Now, works contract service is something which is in relation to immovable property. Okay. And in this particular contract, when we have a breakdown of various works which are being undertaken, we have an option to analyze whether each of those works are resulting in creation of an immovable property or not. So basis that, I would believe that we can go into item-wise identification whether the same is block credit or not, because the blocking provisions are vis-a-vis the creation of an immovable property. And the definition of works contract service is works which are done in relation to immovable property. That is the basic difference.
Correct. So I'll just like to add my view. See, I also agree to Yash view. Okay, that you can break the contract. Just keep it on that works contract only. Because if you see section 17.5.6 C, okay, it says works contract services when supplied for construction of immovable property. Okay. So this says that works contract services when supplied for construction of an immovable property other than plant and machinery. Okay. Now, one argument is that you say that the works contract services, the moment a single contract is classified as a works contract by the input service provider, whether it has movable, whether it has immovable, whether it has other items, I'll disallow the entire credit. That is one argument which definitely there is a likelihood of department taking the stand, because department will merely go on the HSN classification. It will say the moment the classification is there of works contract, we will deny you the credit. But if we see the intention of the law, if we see the drafting of 17.5, the denial has to be only to the extent of construction of an immovable property. And therefore, these words, works contract service, when supplied for construction. So we have to correlate, we have to have a harmonious reading. And therefore, even though in that BOQ that there are various items, you may say on a consolidated basis it's a works contract service, but the restriction will be only to the extent of construction of an immovable property. That is my view, and therefore we can go item wise on this. Of course, a practical approach when advising to the clients or doing it on your own, these things would be always to advise the client that whenever you give a work like this, we can have different contracts. For the movable portion, you can have a different contracts where you are getting ITC, like you have a different contract from plant and machinery, you have a different contract for the movable portion, you have a different contract for the immovable property, if possible. So that will avoid these disputes. Department may take that earlier excise judgments and try to say that you cannot change the classification at the recipient. That's a possible area which the department may do. But because the C and D you have to read harmoniously, and the restriction, and even the definition of plant and machinery, the restriction is only for civil related work. The restriction is only to the extension of construction of immovable property. We can go item wise to decide the eligibility. That is my view. And the restriction would of course be limited to the immovable property. Of course, one safer approach would be you ask the supplier that delineate the immovable portion so that it gets a HSN of works contract, and segregate the movable or other portion and take the other HSN whichever is applicable to that particular service. Mr. Kishan has a view.
Hello.
Yes, sir.
See, I have got one observation on this term, that capitalization. So far, it is very determinative to decide allowability 17.5 CR, because what happened, in individual also may own the properties, rent it out. So he may not capitalize, he may show it as a revenue expenditure. So how far this capitalization, concept of capitalization under this section, that explanation is very important or too important to decide whether allowability of standard credit. Hope you got my query.
Yeah, we understood, sir. You want to understand the scope of capitalization.
Yes.
See,
I may make mistakes also. Instead of capitalization, revenue, or vice versa.
Otherwise also. See,
yes.
See, this law actually gives you a sort of deeming fiction.
Yes.
An item which has an enduring benefit of more than a year is normally capitalized. As an accounting principle. Somehow we may be able to convince the auditors by इसको capitalize नहीं करना है, क्योंकि ये तो 15 महीने ही चलेगा या 18 महीने ही चलेगा, and I treat it as a revenue item. So in fact, it gives you benefit in that sense. The GST provisions gives you the benefit. So of course, there is always since it's a deeming fiction, this thing will always create a advantage or disadvantage in certain peculiar circumstances. Capitalization, in my view, is the act of accounting it as a part of asset and apportioning the cost on a period of time in your profit and loss account, and not at one go, basically. That would be more of a common parlance definition of capitalization. Yes, you would like to add something on this?
Yeah, sir. So basically, my internet got disconnected for some time. I've connected on hotspot, so I'll keep my video off for some time. So, sir, are we giving our views on this case study, or?
We can start with the item wise. I know Mr. Vishal has some view. We'll just hear his view and then we can go on the item wise thing.
Item wise discussion.
Yeah, Mr. Vinod, am I audible?
Yeah.
Yeah, Vinod bhai, as you earlier said, the practical way out would be, to break the contract. So in that case, is there any possibility, where the department can say that you have artificially broken up the contract and just to avail the ITC, and basically it's a single thing? Then can they then, turn back and say this is only a artificial breakup?
No, sir, that would be more difficult for them, because if you see the works contract definition also, it covers only immovable portion. So to get something into movable portion as a works contract is also not proper on the part of the department. So I think so that is very remote possibility in my view.
Okay. So I'm just, visualizing a thing, where entity has given a contract to Mr. A, and Mr. A only gives two bills, say one for a movable property, one for immovable property, and then then that may create some, doubt in the minds of department.
Each contract is separate. Now you can have two separate work orders.
Yeah, definitely.
Practically, so each contract is separate. See, department तो could be merged और वो कर सकता है, that is okay, but उसका legal chances of success is very less.
हाँ, yeah, मतलब just मतलब ये ground के लिए department doesn't have any legal ground, right?
नहीं.
Yeah, okay, that's all. Thank you.
बाकी department वैसा करेगा सर, chances बहुत है, पर होगा नहीं, आगे कुछ नहीं होगा.
Yeah, okay.
हाँ यश.
Okay, so now what we'll do is, after coming to a reasonable conclusion that this is a works contract service, and we can go into item-wise validation of whether ITC can be claimed on each of these activities or not. Now we'll go into deciding whether we can claim ITC of each of this work. So the first one is demolition and dismantling work. Can we claim ITC of the demolition and dismantling work? So I think we should give our views and close it, because we are already 50 minutes past the section. So as I had mentioned earlier, three conditions which we need to check is, the first one is it should result in creation of immovable property. Second one is it should be on its own account, and third one is it should not be a plant and machinery. The second condition will get satisfied in all the cases because this work has been done on own account of Panda Limited. So only two things which we need to check against each of this work is whether it is resulting in creation of immovable property, and second, if it's a plant and machinery or not. Okay, so in the first case, demolition and dismantling work, it does not result in creation of immovable property. In fact, it is demolition of an immovable property. So therefore, this condition is not getting satisfied, and ITC can be claimed on demolition and dismantling work. Vinod sir?
Sir, can I come in, sir? I'm sorry. Sir, I beg to differ with that, because demolition should not be looked into in isolation. It should be considered as a parts of the construction work. So that if you treat it as a capital expenditure, then you cannot. Otherwise, it can be taken, sir.
Yes, on this aspect, I have a different view from you. I also feel that demolition should be treated as a part of that construction civil work. And I feel we'll not get the credit, because this particular contract is a renovation contract. So renovation would normally have some demolition and then a fresh construction of it.
So then we are trying to say that we are clubbing this work with the other work, but other works
is a part of this. Civil, we are trying to segregate the civil portion.
Okay.
Right.
I don't agree to this, but yeah, maybe this can be one of the views. The second work, we'll go to the second work, which is construction of concrete partitioning walls so as to make cabins. I would believe that this will result in creation of immovable property, and therefore ITC will not be available. Vinod sir, agree?
I agree with you. Any contrary views, sir?
Okay. Centralized air conditioning system, compressor fixed to the floor by way of foundation and carrying out incidental ducting and piping work. I would believe that this is centralized AC is clearly a plant and machinery, and any ancillary activity around installing the air condition, which is ducting, piping, is a
Just 1 minute, sir. I think sir is having some network issues.
Yes, sir. Vinod sir, you can just give your views on that part. So, Himanji, I'll continue, or
उनके लिए
Yeah, sir, please, Vinod,
Sir,
you can continue.
yes.
Mr. Chandrasekhar has something to add if you.
Yeah, Mr. Chandrasekhar, you can add now till the time Yash joins.
Regarding that centralized air conditioning system,
Hmm.
can we take a cue from that, no, this lift decision, etc.? I think there are some recent AR ruling to say that they hold that it is a immovable property and they said credit was denied. Though I am not in agreement with that, it is. So there is say centralized air conditioning system merely because it is embedded to earth or something like that, you cannot call it as an immovable property. It is. So
You need to keep that spirit of not agreeing to the advance ruling.
Yes, sir. Yes.
That needs to be there. So don't worry.
I find I find it very difficult to digest that the solar power plants, everything they call this as works contract, all this. There also I have a serious difference. Anyhow, they have given a valuation some 60, 70, that is that. So we left it for old initial period. Of course, we are contesting that issue.
Correct.
So I am that it will be.
Yes, you are back.
Yes, I'm back.
So yes, Mr. Chandrasekhar had a view on that advance ruling things. So you can continue, Yash.
Sure. Bhavin, I think Bhavin Bhai has raised his hand. Bhavin Bhai, you would like to add something? I think then we'll go to the next activity, which is cubicles for providing sitting space to its employees. Now in this modern times, most of the cubicles which are being erected, they are modular cubicles, whereby various separate parts are being brought in and they are just fixed, connected to each other. So I would believe that ITC of cubicles will be available, as it is not resulting in creation of an immovable property.
Bhavin ji ka message unmute.
Now you have been unmuted. No, I beg to differ with Chandrasekhar ji regarding centralized air conditioning system. So I referred to earlier that the object and the nature of annexation is important.
Correct.
Maybe you may be able to shift that, but the object is that air conditioner will remain there. It is not like that your quarry for that construction of the mixture is there. So it is temporary for that purpose, only for the purpose of the construction of a building. Here the centralized air conditioner will remain there itself.
Correct.
So you may refer to the Supreme Court decision of MCGM versus Indian Oil. So
Sir,
I am yes, yeah.
But can we not take it as a plant and machinery?
Yes, sir. Basically, we are saying centralized AC is a plant and machinery. We are not going to the immovability.
No. Once again, how can we be plant and machinery? It is a showroom. Whether it is a manufacturing something like cars, and then you can consider how can plant and machinery. Plant and machinery is some product or manufacturing some process to be undertaken.
Sir, BPO may if you do a AC installation, AC is not a machinery.
Sir, plant and machinery is.
In that way, in your office also air conditioner is a machinery.
Correct.
The point is legally immovable property or not. How can we plant and machinery?
No, sir. If it's a plant and machinery, then we don't need to check the immovability criteria, sir.
But whether it is a plant and machinery, first
yes, sir. Why not?
We'll come to that, sir. We'll come to
that. Okay. Apparatus, equipment. Okay.
Yes, your views how it will come in that. Basically, Bhavinji has a query that whether we can treat it as a plant and machinery or not.
It is a machinery, sir. It is definitely a machinery, and the definition of plant and machinery includes equipment machinery. Plant and machinery is a machinery, and
correct.
Also while in books of accounts, I think for income tax purposes also it is capitalized in plant and machinery block.
Yeah, Bhavinji, now since earlier excise provisions were only for a manufacturer. Now since the provisions are applicable to all service providers, that so you have to take the plant and machinery as applicable to all. We can't just say only where you manufacture. Even a effluent treatment plant is a plant, whether it is in a manufacturer or it's in a mall.
Yeah.
So plant and machinery is quite wide. So we are taking this, whether it is immovable or movable, that dispute, even if we forget, because we will have a divided audience in this. But as a plant and machinery, we are taking all the credit.
Okay.
Next up is cubicles for providing sitting space. I have already given my view. It is not an immovable property, and therefore ITC will be available.
Correct.
Next, we will go to vitrified tile flooring. Definitely, it is an immovable property. Flooring is an immovable property, and therefore ITC will not be available. Vinod, you please interrupt wherever you know your views
Whenever
are.
there's a difference of opinion, I'll come.
Luster paint on wall is definitely an immovable property, and the paint gets embedded on the wall, and therefore it is an immovable property. ITC will not be available. Concealed electrical work, though it is a concealed electrical work, however, it cannot be said to be an immovable property because it can be removed at any point in time, and it can be the wirings and everything can be reused. So therefore, it will not satisfy all the tests of the immovability criteria, and ITC will be available for concealed electrical work. I think we have 2 hands raised if they want to add on any of these works. Mr. Chandrasekhar?
Sir, I just want to know your views that, see, under the income tax law, section 30 uses the word current repairs. But here they say that if you look at that definition, that they say that repairs only they use that. Will it make any difference? Say, for example, though under the this thing we can consider that as a revenue expenditure, but income tax law says that that it is not a current repair, it is a substantial enduring benefit or like that, and they disallow that. Will it have any impact on
which work you are raising this point, sir? For which activity?
No, I am talking about this, say, vitrified flooring, no? So they are replacing the flooring. Okay.
Correct.
So there are controversies under the income tax law to say that whether it should be capitalized or should be treated as a revenue expenditure. All these things are there. It is. So accounting treatment is one thing, but suppose in tomorrow income tax they disallow it. Okay, they say that it is not a current repair. Will it
I think we'll stick to the facts of this case. In the facts, it is very clear that the Panda Limited is going to capitalize the entire cost. So I think let's stick to the facts to avoid confusion, sir.
Income tax law also permits you to you may treat the book one way and you may claim it under the computation statement different ways.
So, with respect to concealed electrical work, what I want to add is like this, that the basic electrification, what I understand from the word concealed, is this is a basic electrification which is done. So to make a building habitable, usable, I'm not on fixtures, electrical fixtures, I'm on electrical concealed wiring. So unless and until those are put, the building cannot be used per se as a building. Right, so that will be capitalized or rather in the books of accounts also along with building, keeping aside the accounting treatment. Since the building has to be an habitable building, accordingly, I think in my opinion that ITC will not be eligible for electrical work. I understand for transformer the case may be different, but for basic electrification I beg to differ.
Sir, just to add to your Mr. Subramanian.
Yeah. Sir, in respect of concealed electrical work, is it possible to remove that, without affecting the building?
Yes, sir. Wires can be removed.
Wires can be removed.
Yes.
Wires also, it is not possible. It is concealed. Therefore, there will be some damages on the building. Then only it is possible to remove it. So therefore, it will not result in removal.
You have to check vis-a-vis the wire, sir. Because right now we are talking about the credit of wire. If you can remove the wire without causing substantial damage, and if it can be reused, it cannot be said to be an immovable property. That is my view.
Sir, would like to add again, with respect to wires, per se, wire cannot be concealed in the building. The piping has to be done.
Yes.
Thereupon the wiring is going on, and therefore we can't. While talking about electrical work, those piping are also an integral part of an electrical work, and therefore they accordingly became an immovable being to make a building habitable. Therefore, again, there may be an issue with respect to
I'll add one more angle to this. Whenever you do electrical work, is it construction of immovable property or installation of electrical work? Is it construction or installation?
It is installation. Definitely, it's an installation.
Even if we see the earlier service tax definitions, the electrical work was classified under erection, commissioning, and installation. So that is one more angle we can add to this argument. Apart from the movability or other aspect, I do understand pipes and all, pipes and cabling. There are two aspects. One is the cabling, one is the pipes. Now today, suppose you are wiring, especially when we talk about this commercial offices and all the wiring goes to the false ceiling, false flooring. तो वो तो आप जैसे खाली करना है, you can all majority of the thing you can remove. If you see the factories, electric वो trays बन रही है आजकल, cable trays. On that cable trays you put all the cables, so that ये सब झंझट ही नहीं रहे civil work का. So in that sense, we can say that electrical works credit you will get. That is my view. So you may
Bhavin bhai, you want to add?
Yeah. I beg to differ with this, because say normally electric wiring, so when you do the working, no, you buy in bundles, and then according to the size it has been, I think, used.
Correct.
Now when you remove, no, it will be some different sizes. It is not going to be used in the other side. So basically, you will, if you incur 100 rupees, you will hardly get 10 rupees if you are going to sell in the market. So the point here is, and further the object is going to remain there. So in my opinion, it is immoral. Now coming back to the centralized air condition, I just read that explanation, which was just can you come back to that explanation? Your particular slide for explanation is which is given under the 17.5 below subsection 6. Plant and machinery, yes. Yeah. So I'll just read down. So what it says, expression plant and machinery means apparatus, equipment, machinery fixed to the earth by foundation or structural support that are used for making outward supply of goods or services, or both. So we have to see here particular, this is what showroom, whether it is used for making outward supply of cars for the dealer to fill the car needs an air condition, whether it can be considered plant and machinery. That is a limited point I just want to draw the attention.
So you are taking the term used as a direct use.
Yes, yes. Otherwise, everything will come under this.
Use as direct use. अपने पुराने service tax definition में भी input service was used, and there the codes have their used and is direct, indirect, anything related to business. And of course, today in offices and this thing, without a AC, it's not possible to give the services. So I feel that should not be an issue. उतना issue नहीं आएगा उसमें. Use will always include direct, indirect, both.
Okay.
We'll go to the next work, which is outdoor lighting and switches. Definitely this can be removed. It is not an immovable property and ITC will be available. Carpentry work, including tables, chairs and door frames. Now over here, I feel that credit of tables and chairs will be available because it is movable. But door frames is doubtful, because door frames are integral part of door, which is an immovable property, and therefore I think credit of door frames cannot be claimed. Plumbing and sanitary work, the piping work which is done inside the walls, the concealed piping work which is done inside the walls, though that can be a debatable credit. One can say that it is an immovable. But the fittings which are fitted outside, like your taps and showers and all, ITC of those will definitely that can definitely be claimed. Data and networking, fire alarm and detection system, firefighting system, CCTV, TV and HDMI, those are definitely movable properties and ITC can be claimed. Vinod sir, you would like to add something?
I would agree with Yash's view. If there's any other view, contrary view, then we can discuss that, or then we can move to the next case study.
Sir, before going to the next case study, I would just like to highlight one AAR to the group in the case of Nipro India Corporation. Generally, I don't rely upon AARs, but this is one of the better ones, where they have actually analyzed the eligibility in a proper manner. And in most of the cases, our views are matching with what has been held in the AAR. Only in a couple of places where they have highlighted in red, they are differing with us. But in most of the other cases, the AAR also tends to agree with our view that ITC can be claimed. We'll go ahead to the next case study, and the next case study is on the CSR activity. Facts of the case are Seva Limited is engaged in the business of supplying irrigation equipment and solutions. Now, as a part of their business activity in furtherance of its CSR obligation, it has incurred expenses worth 2 crores in relation to floor training to underprivileged children with the charitable organization. Now, these expenses will be incurred towards providing proper uniforms and equipments to the children for supervision of children and for canteen services of the charitable organization. With this facts of the case, the issue to discuss is whether Seva Limited is eligible to avail and utilize ITC towards expenses incurred in relation to the floor training to the underprivileged children, being expenses incurred in the course or furtherance of business, the nature of expenses being uniform training expenses, catering, etc. So the moot question is, can Seva Limited claim ITC on the CSR expense which they have incurred? Yes, would like to, Mr. Chandrasekhar, yes.
Sir, I am of the view that yes, credit can be availed. Maybe we can make a reference to that the case law rendered under the context of service tax law, where we say that if something has been done as a statutory part of the statutory obligation, no, there they say the provision of food and other facilities to employees. There say that if it is a mandatory requirement of the statute, then it can be taken. You can take credit of the same. It is. Of course, you may say that no, here under the GST law 17.5 separately provides for everything, etc. But I would say that an harmonious interpretation goes to say that still it can be availed as an input tax credit. And my answer would be the same, even if it is exceeding that 2% threshold. This is my sum and substance of my submission.
Okay, Mr. Subramanian. Okay. Would anyone else would like to add?
Hello.
Yes, sir. Yes.
Sir, it is, it is obligatory on the part of the company to incur the CSR expenditure. So therefore, the company, in order to carry on the business, otherwise, the company said, there is a possibility to levy the penalty. So therefore, in order to comply the law, this expenditure is being incurred. Therefore, my view is whether it is within 2% or more than 2%, the company is eligible to claim the credit.
Yes, Mr. Kishan.
Yeah, it's not for the purpose of business, no? So therefore, it may not be allowed. And comparing with the service tax, I think may not be possible.
Achha. Okay. Sir, why do you say that it is not for the business?
In what way it is helping to carry out the business, actually this CSR activities, because CSR, this business was going on even pre-CSR obligations.
Okay.
Now there also business was going on. So why, in what way it is helping this activity, undertaking this activity?
Okay. Yes. Shreya would like to add something?
Yeah, in my view, it is allowable expenses because CSR obligation is mandated under the Companies Act. First, it is obligated to do so, and it has a wide implications. So it is for the business purpose to stand in the corporate, they have to incur those expenditures. So definitely it is allowable.
Okay. Mr. Gandhi would like to add?
Yes, this is a different angle जो गुप्ता जी भी करते हैं चैरिटी, तो ये बच्चे लोग का काम है, कुछ करेगा, उनका ब्लेसिंग मिलेगा, बिजनेस डबल होगा, गवर्नमेंट विल बेनिफिट लॉट आउट ऑफ दिस. So take that as one of the angle and go ahead with taking credit.
Okay. Mr. Praveen?
Can it be called as an appropriation of profit? And basically it is not in the course or furtherance of business, but it is the appropriation of profit which has been earned, and therefore it is not an allowable ITC.
Here I wish to differ that is though later on there is an amendment under the company law saying that it may I think that the income tax law they say it is an appropriation, but actually it is a charge on the profit, sir.
Okay. Vinod sir, should I proceed with my views?
You can give your views and I'll add on to it.
ठीक. So if we look at the legal aspects around this case study, first we'll refer to the provisions of the GST law. And what we'll do is that section 16 and section 17, which actually lays down the conditions for claiming ITC. It says that if the expenses incurred in the course or furtherance of business, then ITC can be claimed. Now, the reason why I am incurring this CSR expenses, because I am into business. Company law is mandating me to incur some certain percentage of my net profits as CSR because I am into business. The whole reason I am doing this CSR activity because I am into business, and therefore I think it will definitely satisfy the condition of being in the course or furtherance of business. Now, like someone had highlighted that how it is helping business in any way. Now, there are various ways in which a business or a company can incur their CSR expenses. Some of the examples are like, if you would have observed on footpaths or maybe on the dividers of the road, the plantations and everything, plantations are being grown and maintained. So over there, you would have observed that there is a marketing or some branding which is done of builder or maybe the person whosoever who has incurred that particular expenses. So what the idea over there is that those companies, they are actually maintaining those plantations and all on the dividers as a part of their CSR activity, for which they are also doing their branding by keeping their boards and all. So this is in a way indirectly helping them in building their brand name, in showing to people that as a company they are also doing something towards the society. So one can say that such kind of activities definitely is helping businesses in building their brand. So therefore definitely it is in the course or furtherance of business. Going to section 17(5), I would say that none of these clauses, none of the clauses from A to J, none of the clauses, they are specifically directly or indirectly denying ITC on CSR activity. And we discussed some time back that the opening of this subclauses notwithstanding in relation to the following. So this clauses is definitely narrowing down the scope of blockage of ITC. And none of the clauses of section 17(5) are specifically directly or indirectly blocking ITC on block credit. And therefore, I would believe that ITC on CSR is not blocked. If we refer to the provisions of section 135 of Companies Act 2013, it mandates a company to incur certain expense as a CSR expense. So therefore, because it is mandated by a law, as a business entity, I am obligated to incur those expenses and therefore can be said to be in the course or furtherance of business. Now, I also understand that the company's corporate social responsibility policy as well as the Income Tax Act, it does not treat this as business expenses, because in Income Tax we have section 37, which specifically says that CSR expenses is not a allowable expense. I completely understand, but when we are determining ITC for GST, and if GST provisions per se are not blocking or disallowing these credits, then in my view, ITC should definitely be available. And we already have advance ruling in the case of Dwarikesh Sugar Industries Limited, where the advance ruling authority has held that ITC on CSR expense will be allowed as ITC. I'll just quickly read out the observations of the ruling. The companies are compulsorily required to undertake CSR activities in order to run its business, and accordingly it becomes an essential part of its business process as a whole. Therefore, the said CSR activities are to be treated as incurred in the course or furtherance of business. Now, in this AR, the authority has also relied upon the judgment of Mumbai Tribunal in the case of SL Propack Limited, where it was concluded by the tribunal that CSR activities are an essential part of business process and therefore are to be used as incurred in the course or furtherance of business. The AR also agreed with the applicant that clear distinction needs to be drawn between the goods given as gift and those provided or supplied as a part of CSR activities. While the gift is a voluntary and occasional activity, CSR is obligatory and regular in nature. CSR expenditure to be incurred are mandatory under the Companies Act. It is the company's obligation to incur such expenses in order to be in compliance with the GST law. Since CSR expenses are not incurred voluntarily, they do not qualify as gifts and ITC can be claimed on the same. So relying upon this ruling and various provisions of different laws, which I just mentioned, I would believe that ITC on CSR expense can be claimed. Yes, Vinod sir.
Mr. Subramaniam wants to add to this before I can. Mr. Subramaniam, you want to add anything to Yash?
Mr. Arti would want to add. I think Mr. Subramaniam, his hand is not yet lowered.
So, what will happen to the food item which you have referred in your query with respect to the
food as well as uniform? I'll just share my views on that. Food is there, uniform is there.
Yeah.
Sir,
so there is a specific disallowance, no? Yes,
yeah.
that is what the Mr.
But I am not supplying food per se. What I am doing is it is the expenses are for the CSR expense. So I have given food, I have given uniforms, many various activities I have done. I will not be looking at individual items per se while checking the eligibility of ITC. What I am saying is that the expenses in the nature of CSR, may it be uniform, food or anything, it is a CSR activity in the course of business and therefore ITC will be available.
Okay, so I have slightly different views. There are 2-3 aspects. One, whether CSR is in the course or furtherance of business, the answer is yes. The answer is yes because it's a statutory obligation. If you don't comply with the CSR obligations, so definitely you will have penal actions and other things and whatever. So there are various judgments in the past, recent judgments, past judgments, that whatever is the statutory, mandatory, obligatory thing under the law, that credit you will get. So you'll get that credit as long as it satisfies your primary condition of a item of input tax credit being used in the course or furtherance of business. That is satisfied. So therefore, in that sense, the first hurdle is crossed. Second, in that same thing, what is mandatory? Mandatory is whatever as per turnover you are supposed to do. Now, if you are doing something extra, the earlier judgments which says that if an activity is mandatory or statutory, howsoever it may be indirect to your business, you will get the credit, will not help you because those judgments are primarily on the premise that since it is obligatory or it is mandatory on the assessee to provide that, he'll get the credit. Without that, he cannot do the business. So therefore, in that sense, what is within the statutory limit, as a CSR, you fill in the broad eligibility of the credit. Whatever is not statutory, it is over and above your actual what you are required to do. There, the entity, the assessee would have to prove a remote, a direct or indirect connection with his business. Now, like Yash had given the example where the builders maintain the gardens and they put their brand name. That is a connection. There was a judgment of SL Propac in which he used to train the local persons in his own factory to do the accounts and production work. So there he could have very well said, even if I'm doing a CSR expense, I'm getting my production work done at a lower cost than what my employee would have done. I'm getting a temporary labor in lieu of my CSR activity. So of course, that is in the course or furtherance of business. In those cases, I feel even if this is over and above your extra limit, you'll get the credit. But where there is no direct link or indirect link, for that extra thing, I have a different view. I feel we may not be able to sustain on that particular ring. That is my view. The third aspect, which is quite different, is there is a clause in GST which says that goods which are disposed of by way of gift, the ITC is not available. See, whenever you do CSR activity, there are two aspects. You may either receive some services, you may either appoint an agency to do some CSR on your behalf, they may give you a service bill, or you may purchase goods and then distribute it. Like many persons were distributing masks, sanitizers, and other things, books, and all this. So, from the CSR angle, an item which you give as a part of CSR, my worry, what point of view was, how do we come out of a clause which restricts the credit on goods which are disposed of via gift? Now, what is CSR? CSR is also basically, it's a statutory compulsion, but in the form of donation which I give to the other person. The person to whom I've given the CSR benefit, the actual recipient or the beneficiary, has got it as a gift from me or as a donation from me. Donation and gift in this sense, it's slightly interchangeable. He has got it as a gift from me. I may have done under a statutory obligation, but the fact that the recipient who has got that particular item is enjoying this item as a gift will restrict the credit on goods for the CSR activity. That's an anomaly. You may say it's an extreme view, but that is what I feel. The credit on goods, since they would fall under that clause of gifts, will be restricted even though under the mandated CSR activity, and the credit of services which you do for CSR within the statutory limit, definitely you will get. Beyond the statutory limit, you will have to prove some nexus indirect with your business, and then you'll be eligible to take the grade. That is my view, quite different.
So a couple of points, sir, I would like to add here. Sir, vis-a-vis the point which you mentioned that someone has to prove that it is not a gift. I would believe that there is some distinction between donation and gift. Donation is a contribution for a specific cause, whereas gift is something given to another voluntarily without any charge or without any return expectations. So, if someone is able to demonstrate this, then I think there is a difference between donation and gift. And vis-a-vis the nexus, you mentioned that some nexus vis-a-vis in the course or furtherance of business has to be proved. I would believe that in modern times, only the main or ancillary main activity of the company, say for example, if it's a manufacturing company or a trader, that is their main business activity, is fine. But in modern times, they also have some obligations and responsibility towards the society, towards the environment, and towards the betterment of the people. So in that sense, it can be said that it is their obligation to do something for the society or people at large, and therefore it is in the course or furtherance of business. Yes, I think Shreyash has raised his hand, if you would like to. Yes, Shreyash.
Yes, you are on mute.
Yeah. Now you're able to hear me?
Yeah.
So just at a point on goods disposed by way of a gift. So here, should we not interpret in a manner such that I had certain goods which I am disposing of by way of a gift? So I would say there is a fine distinction here. So had I been a manufacturer of the same line of goods, or had I accounted these goods with me, those were lying with me, and then I am doing a donation of these goods, probably that 17(5) entry could have been attracted. Vis-a-vis this sort of a situation wherein I am purchasing, or I would say I'm incurring certain expenses by way of purchase of uniforms. In most or 9 out of 10 cases, I would not account this as goods in my books of accounts as well, and I am directly distributing amongst the underprivileged. So can we not in that context take 17(5) out? Also, recently on 25th August, there is a MCA circular. There's a specific question which says that are CSR activity in the form of distribution of goods in kind permissible? So there they have clarified that it is not permissible if you are not incurring or spending that particular amount. To say that if I am into the same line of goods, or I have that goods in stock, then that is not permissible to qualify as a CSR. However, if I am spending something,
is not CSR, it has to purchase from somewhere and give, like that, no? Differentiation.
Correct. So can we take that line of argument?
The uniform word in this example was because it's underprivileged students, we actually, it may be school uniform. So whether it makes difference, shares to your argument?
No, so I thought in the facts, so this is not into this business of, so it's into supply irrigation equipment. So I am just assuming that, uniforms is nowhere related to his business.
Correct. But then if I have to take credit on uniform as an input, first I have to satisfy input and then I have to show that it is not under 17.5. These are the two things which I need to satisfy.
Correct.
So input, let's say it is in the mandatory criteria, so it's an input. Okay. But then the question would come 17.5. That is where there's a difference of opinion. But let's see what happens. I would hope everybody gets the credit. Thoda view alag hai is baar.
Correct. Okay.
We can move to the next one.
Yes.
Yes.
Yes. The third case study is on the makeup expense of an artist. The facts of the case are a TV serial production house is producing a TV series for a TV channel. The copyright in the program will be with the TV channel. Now, TV producers have availed the services of makeup artists to undertake makeup of various artists taking part in the shooting of the program. Now, the issues which we need to discuss is whether producer can avail ITC of GST, which is being charged by the makeup artist, and whether the said expenses can be considered as eligible for credit in view of the fact that same is the part of a composite supply to the TV channel. So these are the issues which we need to discuss. Yes. Shreyash, you would like to start?
Shreyas, you can just unmute yourself and speak. Or Mr. Subramaniam can start. Mr. Chandrasekhar, you can start.
If it is part of that composite supply, when which you are charging on your output supply, I think that we can very much take the credit, no, sir. Why there is a doubt, sir?
Okay, we will come to our understanding. Yes, Mr. Subramanian.
Hello.
Yes, sir.
Sir, used by a registered person for making an outward taxable supply of the same category of services, correct? So then only you can claim the credit. So is it in this case, is it in the same category of supply of goods or services?
Okay.
No. He's making a program. It's like a TV serial production house, no? Same supply or a part of composites or mixed supply? So let's take example of Balaji Telefilms. Okay, it will get the serials produced for the actors. It will arrange the makeup man, no?
Yeah.
So
then it is a composite supply, therefore eligible to claim the credit.
How is it composite? How do we define composite?
Composite means two or more taxable supply,
correct,
which are naturally bundled in conjunction with each other.
Is Balaji making two supplies to ZTV or Star Plus, or it is making one supply?
Okay, he is making one supply.
Then it's not composite, no? I mean, I hope that is my view.
Yes. So producer is basically providing only one service.
Okay.
To be called a composite or a mixed supply, there has to be supply of two or more taxable services.
Is it a naturally bundled? That is, we have to see, what is the prevalent business practices in that particular industry, sir?
Naturally bundled, provided I make two supplies to the recipient. Like in a hotel, you get a food and you get a room. These are two supplies which you get, and then it can be naturally bundled. But if I get only one supply, then this is basically an expense to give the supply would be the copyright, which you'll give in the TV program.
Shreyash, you would like to add? Okay. Sir, should I proceed with my views? Okay. Now, basically, the provisions of section 17(5)(b)(1) are the provisions, which are creating or rather blocking this particular credit, because over there the word used is beauty treatment. Now, what do you mean by beauty treatment? The word beauty treatment, the term beauty treatment, is not defined in the GST law. However, it was defined in the Finance Act 1994, and section 65 clause 17 defined beauty treatment as includes hair cutting, hair dyeing, hair dressing, face and beauty treatment, cosmetic treatment, manicure, pedicure or counseling services on beauty, face care or makeup or such other similar services. So definitely makeup is a beauty treatment. So that is not a problem. Now the saving grace to this particular blocking provision was this proviso. And in this proviso, there are two exceptions which are given in order to come out of the block credit. The first exception is that the inward supply of such service shall be used for making an outward taxable supply of the same category of service. This is the first exclusion which is given to this block credit provision. Now it says that inward supply should be used for making outward taxable supply of same category of service. Now the inward supply for the producer is the expense of makeup artist, whereas the outward supply of the of the producer is the production service. So it cannot be said that the makeup service is same as the production service, and therefore it will not fit in this particular exclusion. Now the second exclusion which is given in this particular proviso is that the inward supply of such service shall be used for making an outward taxable supply as an element of a taxable composite or a mixed supply. Now, as we already discussed, that the outward supply of the producer is only the production service. He is giving only one supply, single supply, which is production service. Therefore, it cannot be said that he is giving any taxable or mixed supply, because for a taxable or a mixed supply, there has to be two or more taxable supplies. And therefore, it will not fit in this particular exclusion also, and therefore, producer will not be entitled to claim ITC on the expense which is incurred for makeup expense of the actors. Vinod sir?
Yeah, I have a slightly different view, two aspects to this. One is, of course, on the second part, I agree, it is not a part of composite or a mixed supply or an outward supply. Now, what is the scope of the term beauty treatment? So beauty treatment, if we want to interpret, we have to take two things into consideration. Beauty treatment under service tax was an inclusive definition. Beauty treatment includes hair cutting, hair dyeing, hair dressing, face and beauty treatment, cosmetic treatment, manicure, pedicure or makeup, face care or makeup or such other similar services. So it was an inclusive definition. Okay. May not be directly applicable, but we can take the similar nature. Second, the term beauty treatment. So it should be for treating or enhancing your beauty. Majorly, if you use the word beauty treatment, it is basically either you have something in your skin to improve the glow or do something else. That is what is the common parlance meaning of the term beauty treatment. Now, let's take a serial जैसे अभी चल रहा है पॉपुलर वो नागिन सीरीज या कोई हॉरर शो, उसमें किसी का मेकअप किया है कि आपको भूत का मेकअप करना है, आपको ये कैरेक्टर का मेकअप करना है. Will you say that is beauty treatment? Will I say that is beauty treatment? Second, the term beauty treatment is used in the company of the words beauty treatment, health service, cosmetic and plastic surgery. Separately also they have specified in that entire clause. So if you read the harmonious thing, then the term beauty treatment, you cannot say the makeup which is done for doing a particular role or enacting a particular thing in a TV serial is in the nature of beauty treatment. That is not supposed to be permanent or to enhance the beauty always. It has to be basic on that role or the script of the TV program. So I think we can argue on this aspect. we can argue that this is not beauty treatment in common parlance. Since it is not beauty treatment in common parlance, there is no specific definition in GST. And since it is a business expenditure without which the activity cannot be done, I think we can argue and take the credit. Of course, it would be litigative, and department will always try to take the service tax definition. We can argue that it is not a beauty treatment in common parlance. Yes, Bhavinji.
Sir, can I come in for a moment, sir?
Yeah.
Chandrasekhar ji, one minute. Let Bhavinji.
Okay. Vinodji, now the composite definition of composite supply, under that an illustration has been given. The illustration says goods are packed, transported with insurance, and the goods are supplied. Those say it is a composite supply. Basically, it requires to be, if I want to deliver the goods to you, it requires a transportation. It is part and parcel of supply of the goods. Still, they have considered
your obligation is goods delivered at doorstep, no? So there are two supplies.
No, it is one single supply. You require a goods, I delivered the goods. So
at
what is required?
At factory and doorstep.
No. So similarly, if you require particular, if you require particular type of goods and I manufacture your particular type of goods, so whether there are two supply, it is single supply. So here also, a delivery of the goods, it is at my factory or at your doorstep. It is one and the same. In my opinion, the goods are delivered at your particular place where whatever is required to deliver the goods. I may physically come and deliver to you, engage somebody outsource courier or whatever it may be. In my opinion, it is a single supply, a delivery of the goods, but they have considered composite supply. So where I am coming from, the intention which appears to me, we hear the word composite, no doubt. Further, they have also mentioned mixed supply under the proviso to the 17.5B1. I am of the opinion this composite supply, to me it appears one of the, by loud thinking, one of the components should be there.
Cost should be there
to supply output.
Cost, so you mean to say cost should be there?
Yeah, the cost means that particular has to be consumed to service. So here a particular makeup
artist, that will apply to other clauses.
It has been used.
Beverage, outdoor catering also. So for example, shoot होता है outdoor में, वहाँ caterer आके खाना देता है, वो भी आप दे देंगे credit?
If that is a component, yes, sir. That will also I will be allowing.
जो beauty treatment में लगेगा वो food and beverage
this has to be tested. Yes. I am of the opinion it is a part of the composite supply to provide my output service. Without that, it cannot be possible to deliver the services. अगर वो food उसको देना ही है और ये क्या है कि makeup without makeup ना that service cannot be delivered.
Correct. वो तो आपकी वो बात सही है. Yes, Mr. Chandrasekhar, you had to add to this.
Sir, now the problem arises. They said element of a taxable composite or mixed supply. So then how we'll define that element? So maybe we can say that take a cue from that works contract. Anything it is not necessary it should be visible on the surface
output, or final output.
Even otherwise, it can be called as an element, but the problem is it says it in relation to a composite or mixed supply. Now, how we are going to define this television program as a composite or mixed supply? That is where the crux lies.
The issue comes because composite and mixed supply definitely say two supplies. See, the issue is, Bhavinji, if we come to your example also, packaging and transport, goods remain the same, no doubt, goods remain the same. But your supply has to be contract wise.
Yeah.
If you see, if there are two contracts, same goods, different customers, but if the terms and conditions are different, I can argue these are two different supplies. So therefore, a door delivery supply of goods and a X factory or X showroom pickup of the goods. The goods remain the same, but the nature of supply changes because your obligations increase, your contractual obligations increase. Now here, therefore, you have to go from the contract. You have to see the obligation. If the contractual obligation was to only give the copyright, then how do I say it's an element of composite? So there is a issue in getting it as a part of composite. That was basically my view.
Sir, another thing is that say assume for a moment that if you say that we produce and give it, if you say that the activity is not a service, if it is goods, let's say he transfer intellectual property also. Okay, then there is an element of transfer is there and will be classified as a goods. In that scenario, can we claim an input tax credit, sir? There could be a two possibility that production activity, if he retains the copyrights, then of course it is a pure service. So the element will be difficult it is. Whereas if you say it is a good, sir, can we say it is a part of the element it is?
But then all these are cost in making the goods. So again, that same thing will come. Then all your cost will come in that.
Yes,
then
sir.
it
Yes.
is so in normal cases also everywhere all your cost is in the goods, na? Normally many of the things.
Yes, sir. Yes, sir.
Anyway, let us see कोई film industry वाले को notice आता है तो देखते हैं. ठीक है. We can proceed to the next.
Yes, yes. The fourth case study is on health services and personal consumption. The facts of the case are a company has incurred some expenses for ensuring hygiene and to comply with safety standards on account of COVID pandemic. The issues to discuss is whether GST can be claimed on the following expenses: masks and sanitizers for office staff use for visitors. They have purchased some vaccines from pharma company which will be inoculated by the in-house paramedic team of the company to their staff and the family members, and the medical insurance of the employees. So we have to analyze whether they can claim ITC on this particular expenses. To start with, we will first discuss on masks and sanitizers which are purchased for use of office staff. Anyone would like to start the discussion? Okay.
Yes, you can give your views.
Yes. So the provisions which we need to refer over here is whether section 17.5G blocks this particular credit. 17.5G deals with goods or services or both which are used for personal consumption. Now, what do you mean by personal consumption? So I have broken down the meaning of these two terms, these two words. Personal means something which constitutes a personal property, and therefore, in my view, personal means for the purposes of business, personal would mean that something which is of the owners of the business. So say for example, if it's a proprietorship firm or if it's a partnership firm, personal would mean that something which belongs to the proprietor or to the partner. This personal cannot be stretched to the extent of the employees. This is my view. And if we go to the interpretation of the term consumption, consumption means something which is used in a way that thereby it is exhausted. And also the goods or services can be consumed by a human being only. Goods or services cannot be consumed by the company per se. And also one more point which we need to bear in mind is that in respect of it specifically narrows down the scope of this particular restriction. And therefore, in my view, I would believe that the masks and sanitizers which are purchased for the use of office staff or may it be for the use of visitors, they cannot be said to be for the personal consumption, and therefore ITC cannot be blocked. These are definitely for the course or furtherance of business, because hygiene is very much important, and therefore ITC of masks and sanitizer should be available. They cannot be said to be for personal consumption. Vinod sir?
Correct. I also agree. You will get the credit of mask and sanitizers. These are now in today's time, these are actually a sort of statutory thing, and to protect your business from shutdown, you will get this credit. That's not an issue.
Okay. For vaccines, I would believe that a provision which might impact is, the blockage of health services, which is under section 17(5)(b)(1). It restricts ITC on health services. Now over here, the company has purchased vaccines, which is goods per se and not services. And therefore ITC on purchase of vaccines, pure vaccines, will also be available as ITC. And it also cannot be said to be for personal consumption. And therefore ITC of vaccines will also be available. Vinod sir?
So ITC of vaccines for employees, we can take a view that it is a legitimate business expenditure, not intended, even though vaccines are consumed by a particular employee, the expense or goods are not meant for any personal consumption. It is for getting the business done. And now in many cases like malls and all, if you have a shop, you need double vaccination, otherwise you cannot operate the shop. So all those things are there. It's akin to a more many cases statutory or obligation thing. So vaccine to the employees, no problem. Now the question will come to family members, because earlier also in service tax regime, the mediclaim insurance of family members has been denied by the various courts. So for the employees, they have to hold that it is not primarily consumption of employees, but for family members, the credit has been denied. But that was medical insurance. Maybe we have a chance to argue for family members on the ground that merely giving a vaccine to my employee will not save him from COVID and spreading the infection to the other employees in the office. So merely doing that will not done. So I am giving the vaccines to the family members in order to protect my employee and to protect my business. This thing. That argument we'll have to try and test it, but family members slightly dicey. Employees will get the credit.
For medical insurance, again, we have this section 17(5)(b)(1) where health insurance is blocked. However, over there we have one proviso which says that provided that the input tax credit in respect of such goods or services or both shall be available where it is obligatory for an employer to provide to its employee under any law for the time being in force. Now over here the term used is obligatory, and I would like to highlight one point to this group, that there is a massive difference between the term mandatory and obligatory. The term mandatory means that it is mandated by any authority or by any law, whereas obligatory means that it is morally or legally binding on any person. So this is a basic difference between obligatory or mandatory. However, they have also obligatory is then over there they have also mentioned that obligatory under any law for the time being in force. We understand that mediclaim insurance, this COVID related mediclaim insurance is not mandated. Only for a brief period of 15 days, I think somewhere around in the month of March 20, in one of the guidelines which had been issued by the MHA, for around mid of March, they had mentioned that COVID related mediclaim insurance is mandatory. However, those guidelines were then subsequently after 15 days, they were rescinded. So if anyone has taken mediclaim insurance during that period of 15 days, one can argue that yes, it was mandated under the law. Otherwise, I would believe that ITC of medical insurance will not be available.
I also agree with Yash. Only if you have renewed your insurance policy or taken a policy within that 15 days, you will get the entire credit. Otherwise, in my view, also the credit is not admissible. Any other contrary view, sir? Any way to take credit?
Yeah, I think we'll go to the next case study.
Okay.
The next case study is on gifts given to the employees. The facts of the case are a company celebrating its 100th anniversary, for which they are distributing gold coins to all its employees. Now, cost of one gold coin is 15,000 rupees and it weighs 5 grams. Company has claimed ITC of GST charged on this gold coins. The first issue which we need to discuss is, can company claim ITC of gold coins which are gifted to its employees? Yes. Would someone like to start the discussion? Yes, Mr. Chandrasekhar.
Sir, if we consider this as a part of the salary or employee compensation.
Right now we are discussing only the first point. Pure
That's what-
vanilla case, it is given as gift. To
That's what
employees.
I'm saying, that you are distributing gold coin to the employees on the occasion of what anniversary or whatever it is also, I would say, it is and though may not be a legal part of the I'd say that the employee contract, but if they whatever they give, I think it should be considered as a part of the salary, and of course we can say that credit will be available.
Okay. Any counter views, or would someone like to add further? So the provisions which we are dealing for this case study is section 17.5H, and it says that goods disposed of by way of gift. Now, what do you mean by gift? Gift is not defined under the GST Act, but various other acts and various other rulings. They have said that gift is something which is given voluntarily and without any consideration. Gift is a gratuity and is an act of generosity. It does not require a consideration, but there can be none. If there is a consideration for the transaction, it is not a gift. In one of the Australian ruling, they have held that to constitute a gift, the property should be transferred voluntarily and not as a result of a contractual obligation. So for this particular case study, what I would believe is that when the company is giving gold coin to its employees, when it is not treated as a part of their salary, it is definitely given without any return obligation or without any without any expectation in return. And therefore I would believe that this will clearly fit in 17.5H for the first case, where it is given purely as gift, and reversal will be required under section 17.5H. Vinod sir?
Yeah, I also agree that this will have to be treated as a gift, and therefore the credit would not be admissible.
Okay. Chandrasekhar ji has again raised his hand.
Hello.
Mr. Subramanian, yes.
Yes, sir. Sir, if it is not even treated as a gift, the problem is, schedule 1 item number 1, where it says that a permanent transfer of a business asset on which input tax credit is claimed. So even if we claim the input tax credit, we may be hit by schedule 1 item number 1.
Deem supply to related
Yes.
person also.
Yes.
Deem supply, because if it is in lieu of your salary, then there is definitely a consideration also. Technically, some can argue it is a part of consideration, so deem supply with. So overall businesses, I mean, there's no benefit per se, but for ITC purpose, you can take ITC. And that is a valid point, that it will get hit under schedule 1.
Should we go to the second issue? What will be the position if the expenditure toward gold is treated as a part of perquisite in income tax and included in salary cost of the respective employee?
Yes, you can give your views.
Yeah. So for this particular, in this particular case, I would believe that because it is a part of a salary, it is not purely given as out of generosity, and there is some expectation in return from the employee by the employer. Employer is expecting something from the employee for which he is giving him the gold coin. This is definitely emanating out of the employment contract, and therefore ITC should be available in this particular case. It will not be treated as gift. And also for the third scenario, where it is mentioned in the offer letter that the employees will get gold coin basis their performance. For this particular issue also, I would believe that it will not be treated as gift, as it is emanating out of employment contract. Something is expected out of employee, and therefore not a gift.
I also agree with this. In both cases, we'll get the credit. Of course, that deemed supply angle would be there. So businesses may not benefit, but the credit will be eligible.
Sir, just I want to add one dimension to that. See, even there may not be any contractual obligation. If you look at that whole purpose of giving this sort of gift is to keep the employees happy so that they will perform better. There is indirect flow of consideration is there. So I am of the view that even in the first case also credit can be taken. That is what my view is. That the way we can put it across.
Sir, let's say tomorrow if I don't give a gold coin, there is no obligation on me, no? It's just like the distributing sweets in Diwali or giving a small token in Diwali or any other festival. So everything we do to boost the morale of the employee. But unless and until it gets in an obligatory mode, to get out the way of the term gift would be a challenge.
Sir,
I would get out the way of term gift.
No, sir, I would say that I would want to highlight one of the AR ruling. Of course, they said that there was some cricket match they have conducted for which they have given some free tickets to avoid some nuisance will not be created. There, they have elaborately discussed about what is meant by the term consideration. They say that avoiding some sort of a problem or keeping that the better functioning can also be considered as a consideration. It is. So I think that could be a possibility of arguing that way.
So tomorrow, if a GST guy asks BCCI to give some IPL ticket free, BCCI should tell them, sir, पहले GST भरो, नहीं तो आप nuisance करोगे मेरे को summons देके. That logic will not come as a consideration.
Correct.
The
And also
consideration has to be legally enforceable.
Chandrasekhar, just to add, a gift is always given to make the other person happy. So, just because we are making them happy does not mean that it is helping us in any way. So I think it will still be treated as a gift. Okay, we'll go to the next case study. The next case study deals with the cases where goods are destroyed, and the facts of the case are ABC Limited as a trading division where it deals with supply of packing materials, which is purchased from a manufacturer. Now, during the month of June 21, the trading division had sent a truckload of packing material to Pune by issuing invoice, e-waybill, etc., for which the customer paid consideration in advance. Due to heavy rains, portion of the packing material were damaged and became non-usable by the customer, and he returned the same. The packing material was returned. Now, to the extent of the returned quantity, the trading division claimed insurance on the damaged goods, which was accepted to the extent of 75% of the value of damaged goods. And the trading division also sent back the damaged goods to the manufacturer who procured the same. The manufacturer bought back those damaged goods at 25% value, on which GST was also paid by the trader, as the manufacturer purchased those damaged goods back because he could use it for some other manufacturing process. So these are the facts of the case. And the issue which we need to discuss is ITC implications vis-a-vis ABC Limited and the customer. In the cases where transfer of property in goods has not taken place at the time of destruction of goods, and transfer of property in goods has taken place at the time of destruction of goods. So basis this two scenarios, we need to discuss the eligibility vis-a-vis ABC Limited and customer for the damaged goods, destroyed goods. Would someone like to start the discussion?
Sir, the first 2 points, can you tell it again? What you are trying to say, the first 2 points?
So basically what I'm trying to say is that when the trader, when ABC Limited is has sent the goods to the customer, now when they were transported, the goods got damaged due to heavy rains. Now when the goods got damaged or destroyed, the property in goods, the title in goods had not been transferred to the buyer. That is the first scenario. And the second scenario is the transfer of property in goods had already been transferred to the buyer. This is what I am trying to highlight. These are the two scenarios basically. Could you understand, Mr. Chandrasekhar, what I am trying to highlight?
Not your point, sir.
Okay.
That ITC provision, they said goods lost, stolen, destroyed, etc. We are of the view that it has been something which has been happened before it has been put into your production process or whatever it is. once the goods got finished goods or something like that, and maybe I am of the view that we may not be hit by the particular provisions that it is. So in the first scenario where you say that if you say that the transfer of property in goods has not been transferred, I don't think that we will not be hit by that. I mean, we'll be hit by the provision that we have to reverse the credit. And in the second scenario, where that transfer of property has already happened, see that insurance claim and all this can be a indemnity of the subsequent losses it is. So in that scenario, I think that reversal will not happen. That is my view, sir.
Okay. My view is that in either of the scenarios, whether the transfer of property in goods has taken place or not taken place, the reversal implications will fall only in the hands of ABC Limited and not in the hands of customer, because customer has never accepted the goods. As it got destroyed, he has returned it back to ABC Limited. So therefore, the reversal implications, he has not claimed, the customer has not claimed the ITC only in the first case. So therefore, the reversal implications in either of the case will trigger only in the hands of ABC Limited. Now, in my view, the provisions of section 17(5)(h) will not trigger because the goods are not completely destroyed. Though the main intent with which the packing materials were produced, the main intention of the product would have been lost. However, it has some scrap value because it has been sold back to the manufacturer at 25% of the value. So one can say that though the goods have got damaged, but they are not completely destroyed. And therefore, the provisions of section 17(5)(h) will not trigger because those are sold back to the manufacturer, and ITC should be available to ABC Limited in first two issues. Vinod sir, you would like to add something here?
In my view also, the transfer of property will not impact, and since the goods are not completely damaged, the quality has deteriorated, the ITC restriction under that particular clause will not apply, and the ITC will continue to remain with ABC.
With respect to the third and fourth issue, because the insurance amounts have been received, which includes the input tax credit, can ABC Limited claim the ITC? Will answers change if insurance amounts have been received without input tax component? Now, in my view, even though the insurance claim has been received by ABC Limited, this will not impact their ITC claim. First of all, because I have received insurance claim because I had paid premium for it. The claim is received because I have paid premium for it. Therefore, claim has no direct nexus to my claim of ITC. When I had claim ITC, I was very much entitled to claim that particular ITC. Therefore, subsequently, upon damage and upon receipt of insurance claim, one cannot say that ITC reversal will be required. And in this particular scenario, we have two judgments. One in the case of Pragna Dichem, which is by the tribunal, Ahmedabad tribunal, and one in the case of Tata Advanced Materials Limited by the Karnataka High Court. Now, in this particular case, the courts have held that payment by insurance company, which may be inclusive of excise duty, could not render credit claimed by SSE as irregular. SSE had paid premium insurance for which it got compensated, and therefore it is not a case of double payment or irregular availment of ITC, and therefore reversal is not required even though the insurance claim is received. Reversal will be required only in cases where the availment itself is irregular. Therefore, I would believe that insurance, even though the insurance claim has been received, may it be with GST component, without GST component, reversal will not be triggered under 17(5)(h). Vinod sir?
Chandrasekhar ji wants to add on to this.
I had a question, sir. Will it not be hit by that schedule 1, sir? Disposal of goods on which ITC has been taken?
Yeah, but here the balance, he's selling the goods to back to the manufacturer on 25% payment.
That is a consideration.
Talking about insurance companies.
Sir, all
insurance, so we don't supply anything to the insurance, no?
Sir, all the goods for which we have received claim from insurance company, all those goods are also sold back to the manufacturer at 25% value. Insurance company is not taking any of my goods. All the goods are going back to the manufacturer at 25% value. So schedule 1 will not trigger because there is some consideration.
Okay.
So, just to conclude on that, I do agree with yes, there is no specific provision. There is no specific provision for reversal of ITC if insurance claim is received. There's nothing in the law or this thing, but it amounts to double benefit. There are some judgments which say that double benefit, if it is there, then credit needs to be reversed. Either is practically, if you see today, if the insurance company has to sanction the claim, they ask for a certificate of reversal first. So maybe in future, because insurance companies have also become smarter day by day, so they understood that people were taking double benefit. So if you go for a claim now, normally the insurance companies would ask for a reversal today in this scenario. So maybe these type of issues may not come, but if it comes, there's no statutory provision to reverse the credit. Of course, courts may take a view that will not allow you double benefit per se. So that can be a possibility, but no legal provision to ask you to pay that particular amount.